For those of you who may not be familiar, the NPDA supports franchise and independent powersports dealers through education, advocacy, programs, and practical resources, all focused on helping dealers build a stronger, more professional, and more profitable industry. This partner webinar series gives dealers direct access to the companies, tools, and people helping shape the powersports retail landscape with one goal in mind: keeping dealers informed, connected, and exposed to ideas they can actually put to work. Today's webinar focuses on credit card processing, dealership profitability, and the practical steps dealers can take to better understand and control one of the most overlooked expenses in the business. Every dealership accepts cards. I believe every dealership still takes cards, but not every dealership truly understands what those transactions are costing them. Between interchange rates, key transactions, chip cards, online payments, CVV, AVS, surcharges, cash discounts, downgrades, and compliance requirements, there are a lot of places where small process issues can quietly turn into real money. We're joined today by Bill Treciak. Did I say that correctly?
Treciak, like sick trees.
Boy, I couldn't have got that wrong, and I actually have it in my notes.
You're close.
I got it in my notes. I'm supposed to practice everybody's last name before I do this. So, I miss that one every time. So I'm going to say we're joined today by Bill, and we're just going to leave out your last name, President of Electronic Data Payment Systems. Bill brings decades of experience helping businesses accept credit card and debit cards in a way that is simpler, more transparent, and more cost-effective. His approach is practical and dealer-friendly, focused on helping businesses understand where their money is going, where unnecessary fees are created, and how better processes can reduce both cost and risk. Bill is going to walk us through how to calculate your true effective rate, why the same card can produce very different fees depending on how is it accepted, and how tools like CVV and AVS can help lower risk and cost. He'll also cover surcharge and cash discount programs, compliance considerations, and practical do's and don'ts dealers can use right away to reduce processing cost while still maintaining a smooth customer experience. If you have any comments or questions, if you look down in your Zoom toolbar, you'll have a Q&A button down there. Just click on that, type your question in, and we will work to get those in as we work through the presentation, or if not, at the end, we'll do a Q&A period where I will curate all of those questions directly to Bill. This webinar is being recorded, and the recording and presentation will be made available on the NPDA website after this is done. Usually takes us about 2 days to get that knocked out. With that, I'll turn it over to Bill.
Awesome. Thanks, Mark. Appreciate it. Appreciate the invite and the opportunity to talk to everyone this afternoon. We've been an NPDA partner for a number of years now, since early on. My goal here today is not to, in all candor, I am not here to promote that you switch to EDPS. I am here to support the NPDA's vision and initiative to provide some education, provide some information that might be helpful in your journey, in your dealership, and in this particular area of cash flow for your business. So I just kind of want to set the stage with that right now. This is not a sales pitch. This is very much information that we have kind of pulled together over the years. And I am open to questions and clarifications throughout. So if you have a question, please take advantage of the chat. Don't let the number of slides intimidate you or scare you. There are 39 slides in here. Again, we're going to walk through this, but if you have a question, Mark's going to raise his hand for me so I know there's a question waiting, and we're going to jump right into that question, whatever that is. So first slide here, obviously, we're here to talk about a transparent conversation, really about card acceptance. I'm assuming everybody on the call accepts cards and is very familiar with that side of things. So we'll jump right in. I'll give you a little session roadmap. We're going to talk about what makes card acceptance valuable, which seems to be fairly straightforward. Where are some hidden costs? How fraud and chargebacks and compliance exposure can be reduced, and practical questions every dealer should ask their provider. Again, I want to empower you with some knowledge. I want to empower you and encourage you to, whoever you use, make sure you're asking these questions and you understand what the rules of the road are. And if you don't, that you reach out to your current provider and ask them for their assistance with the rules of the road. The opportunity, why card acceptance necessary? Obviously, these are going to sound very, very straightforward. Customers expect to pay quickly, securely, and digitally. Convenience matters in unit sales, parts, accessories, so on. And friction at checkout can weaken the otherwise strong buying experience. So these aren't anything that you guys aren't familiar with, but I like to kind of state the obvious so we're kind of all on the same page. Higher average tickets. We see that throughout the business when someone uses card as opposed to an alternative payment method. Then we typically have seen over the years, we've seen a higher average sale amount, average service invoice, things like that. And cash flow. Card acceptance reduces your manual cash handling. Obviously, there's a cost to that. There's a cost to taking that to the bank. Electronic funding improves daily cash visibility and makes for cleaner reporting and reconciliation. Let me keep going here. What makes up card costs? So now we're going to get into a little bit of the meat that I think is important that sometimes, most card acceptance organizations don't really see. In this particular case, about 78% of what you're paying in credit card fees are gobbled up by interchange. And what is interchange? Interchange is the wholesale price structure that is set by the banks that issue the credit cards. Okay. They're putting into that formula, they're putting in points, delinquency, statement mailers, all of the various costs, money costs, the float, all of those various costs go in there, and their margin to figure out what the base interchange rate will be. 10% of your pricing is roughly card brand assessments. So back in the day when this all started, Visa, MasterCard were nonprofit organizations. That is no longer the case. But back in the day, they were. And they charged a very, very, very small number of basis points that they collected on every transaction. And what that did was support the brand. So that helped them with marketing materials, the rules and regs, legal oversight, all that kind of stuff. But it was not a profit business. It was a nonprofit, not-for-profit trade association, if you will, or bank association. 9% is processor markup. This is where the variable elements of price start to be introduced. Who's your processor? Oh, go ahead. Mark, you got a question.
Is it correct that the interchange fee is essentially the same for everyone? Doesn't matter if you're a small gas station or Walmart?
That's a great question. The answer is yes, kind of. And let me explain why that is. In the early days, we had interchange, and it just applied to back in those days, 54, when this was first introduced into the 60s and 70s. You pretty much just have retail businesses. We've obviously evolved quite a bit over the years. Now we have online and e-commerce and over the phone and all that kind of stuff. In the most recent history, we have categorized merchants now, right? So you have retail merchants, you have moto merchants, you have e-commerce merchants, but then within retail, you have retail hospitality, you have retail QSR, which is quick serve restaurant. You have retail face-to-face. So you have different types of retail that dictates some level of interchange qualification. Let me give you a very good example. Probably everyone on the call has what's called a corporate T&E card, or your company has issued a corporate T&E card to an employee. A T&E card is a travel and entertainment card. Travel and entertainment cards have a different interchange qualification if they are used in non-travel and entertainment businesses. What does that mean? Well, that means if I'm using my United Travel and Entertainment card that was issued to me by my company at a jewelry store, the jewelry store is going to pay a higher interchange for what's called a non-compliant use of card transaction, because that card is being used at a retail establishment it is not intended to be used at. Therefore, the interchange category is higher for that, i.e., higher price to that jewelry merchant. However, if that customer uses that card at a La Quinta Inn, a Hilton, or whatever, it's going to qualify at a different interchange, lower interchange, because we're using the card within the ecosystem it's intended to be used in. So there, yes, kinda. It depends. If I have a standard retail issued card, like my Capital One card, I can use it anywhere. Those interchange categories, as long as I'm meeting qualification, are going to be the same pricing, right? It doesn't have anything to do with, and maybe this is where the question was coming from. Doesn't matter how big your dealership is, right? That in this case doesn't play a role. It's more about the card type being used. So if you have a gold card, world issued card, a company card, those are variables that will affect the interchange that you're paying if they are being presented in your dealership. Okay. But that's based on card type, not because it's being used in your dealership. I would argue, however, if someone comes in with a travel and entertainment card, presents that in your dealership, you're going to pay a higher interchange because it's not really intended to be used in your interchange or in your type of dealership, if that makes sense. Hopefully that answered your question. If not, please clarify in the chat and we will get an answer to you. Just to wrap this piece up, however, you will see these two categories on the right, about 12%. About 12% of that cost, it's variable, and it is driven by your processor. So who's your processor? If you're using Lightspeed today, your processor is WorldPay. If you're here and you're a Harley dealer and you're using Talon, your processor is Shift 4. That's your processor, okay? And depending on who their bank sponsorship is with, you're going to settle through various banks. That doesn't really affect anything relative to interchange. But as far as interchange goes, am I paying the same interchange in my dealership that somebody else is paying? The answer is yes. Yeah, you're going to pay at the interchange level the same interchange, as long as we're following the guidelines, which we'll get into here in a little bit with AVS, CVV, things like that. All right, I'm going to pile through here the economics. This is one of my favorite slides. I know it's busy, but it's pretty, and it kind of catches your eye a little bit. The really important thing about this slide is that you take away the illustration is trying to show you that you will be charged a different fee structure for the same card based on how you input the card data. So that's all it's showing us. So if you look at the top, you've got a $1,439.65 sale. Same across all four categories. This isn't factual for everybody in terms of the pricing at the bottom. It's just an illustration. So I don't want anyone to get hung up. Oh my gosh, they're paying 2.29%. That's crazy. I get it. I'm really just trying to show you the illustration of you can take the same card, you can process the same transaction differently, either chip, tap, swipe, over the phone, e-commerce, and you're going to end up with a different fee. The reason you're going to end up with a different fee is because they qualify differently through interchange. What does that mean, Bill? Great question. What that means is risk gets accentuated or increases the further I get away from card present, customer present, physical reading of that chip in that terminal. The further I get away from that scenario, the higher interchange is, because the perception of risk that we could have an issue with that transaction goes up the further I get away from that scenario of card present, customer present, chip being read. Okay.
I came across a dealer. I came across a dealer one time who their little chip thing wasn't working, but the keypad still was. And they were just like, I don't want to spend money on another card reader, so I'm just going to have everyone key it in. They could have paid for that card reader 100 times over.
Hundreds of times. You're exactly right, Mark. And I see that a lot. And there's times where I'll even have people out at my house, and they'll have a card reader on their iPad, and they'll just key it in, and I'll say, "Oh, that's costing your company a ton of money." Really? I'm like, yeah. Same card. Again, we aren't changing a card or an amount on this slide. What we're showing you is what the potential difference is in price from $229 up to $429 based on how the card data is introduced into the system. I really hope that makes sense. Take a screenshot of it, take a picture of it, whatever, because it's really important that you take this back to your dealership and train your people, right? Train your folks. Yeah, go ahead, Mark.
I think there's even a couple more levels that go along with this. Like if you look at on the back end out of your DMS, in that first situation where you're utilizing the card as a chipped card, if you have the entire customer's address and zip code and phone number and everything in your DMS, that information is transmitted over to the credit card processor as well. And so, but if you just say, well, I'm just going to run all of my customers as cash transactions, when that information is sent over, it doesn't match up. And so even that chip transaction, if you don't have all the customer's information in your DMS, can cost you a little bit more.
That's correct. That's a great point. I did not cover all those scenarios. But you're exactly right. Um, Cardholder data is super important. We'll get to that here in a little bit. But I want to make sure that you have plenty of time to take a picture of this if you want it. You will get a copy of this, a copy of the access to the video. But this is super important. How you input the data for the credit card data matters. It really can make a big difference in your business. All right,
Hey,
next slide. Yeah,
I did just have a good question from Jennifer. She says we
hey
take a lot of
Jennifer.
deposit. Says we take a lot of deposits over the phone to place orders for parts, etc. If we send them a payment link, such as through Connect or Podium, where does the cost of that fall? Is that better than doing it over the phone?
Again, it's going to depend on the card type. Um, both of those transactions get assigned a card not present um, a card not present method. And I don't want to talk in too much of a technical way, but every transaction that gets submitted, there is literally one field in that string that identifies how the card was entered, whether it was chip read, swiped, hand keyed, e-commerce, whatever it is. The best thing that you can do, and because I can't answer a blanket statement because some of these card types also drive different interchanges. The best thing you can do is, however, to Mark's earlier point, is make sure you're requesting and receiving, and it matches CVV data, AVS data. Like if you're doing a card not present transaction, the only real opportunity to influence interchange that you have is cardholder billing address information, CVV and AVS. Okay.
And like in Lightspeed, you can actually, dealers sometimes get, too many declines. And so they turn off CVV and now you're not entering that 3-digit code. And now
Bingo.
you're paying more money for every transaction because there's a
That's correct.
higher chance of risk or higher chance of fraud.
Or fraud, yeah, of chargeback. There's additional work that could be introduced into this transaction, and you just touched on another one that we will get to maybe because we're already 33 minutes in. That's what stinks about this stuff. We get going and you're like really good conversation and we don't get through all the content, but I'll make it available. You guys want a copy of it? I'm certainly happy to provide it to Mark and he can get it to you. But fraud's a big thing right now. Fraud is always been there. It is ridiculous at this point. I cannot impress upon you guys enough. Do not shut off your CVV. Do not shut off your AVS. Because not only are you just going to think you're going to think we're going to avoid a decline, you're taking unnecessary risk for chargebacks. Okay, whether it's friendly fraud or it's blatant fraud. If that CVV doesn't match and that AVS doesn't match, you have no chance of winning that chargeback, right? Already in a hypersensitive market around winning chargebacks to begin with. It is almost impossible for merchants to win chargebacks today. So you can't help that process by changing your internal process to eliminate some of the steps that protect against fraud, right? The system doesn't know. The system just says, oh, here's the ABS code doesn't match. If you turn that off and approve the sale anyway, you're taking a big risk. Or the CVV information doesn't match. Or the zip code didn't match, right? It's just an unnecessary risk you don't need to take. Let me buzz through this real quick because this is something Mark and I talked about a couple of weeks ago that I think is really, really important. But keep the questions coming because those are really good questions. Effective rate. Hopefully everyone understands how to do this. I have a slide up that I can show. It's not in my presentation, so it would be clunky for me to try to do it now. But I pulled a statement from a previous Powersports dealer that I had that that processed with me for years and years and years. And I'm going to do the math for you real quick because it's super, super easy. You simply want to take your total volume or your total fees divided by your total volume. Okay. So in this case, I just pulled a random month. It was April of 2022. And this dealer did $368,989.68 gross. And their total fees were $6,481.95. And I apologize, I didn't put this in here. I should have. I will add it before I send it to Mark. All I do is take the $6,481.95 and divide it by my total volume and you want to use gross volume, not net of any returns, just gross volume of $368,989.68. Happened to be a very good friend of mine because his effective rate was 1.756%, 1.75%. It was actually was an amazing Harley dealer for a long time. So when we're talking about effective rate, that is the rate you care about. I don't care about swipe rates. I don't care about chip rates. I don't care about, my guy tells me, I don't care. Doesn't matter what words any of us tell you. What matters is that you know how to find your total fees and divide that by your total volume so that you understand what effectively you're paying. Because at the end of the day, what we've done an amazing job at in my industry is getting you to think about this in rates. Rates don't matter. I don't deposit rates in your bank account. I deposit money. Okay. You aren't paying me in rates. You're paying me in money. So what really becomes important is that we understand that just like your electric bill, your water bill, your natural gas bill, your insurance, your property tax, whatever, you're paying money for a service. So understand where this money fits in your budget, in the health of your dealership. Understand what the effective rate is. Doesn't matter if they tell you you're paying 1.6%, and you do the math and you're at 3.5. You're paying 3.5 because you're paying money. So let's think about it that way. It's real important. Effective rates should be tracked over time and compared against transaction mix. Why is this important? Because I can tell you last month, one of the largest processing companies in the US increased their rates by 100 basis points and increased their deposit, introduced a deposit fee for every day they do a deposit for your batch, 30 basis points. They increased rates 130 basis points in a month. And this processor probably does 450,000 clients around the country. They're enormous. There's crazy in my business. It's a great time to sell, right? Which is going to lead me to the next point that I think is really important. When you are talking about who do I work with, Bill? Who do I talk to? I don't care who you work with, guys. Okay. What's important is you understand who owns pricing. And what does that mean? I've been in business 24 years this September, that we've been an independent processing company. I have raised my rates 0 times in 24 years because I own pricing. I don't have anyone telling me how to charge my merchants. I don't have anyone telling me that they're going to force this fee on me, like this 130 basis points. So what's important, and I'm not saying this to be braggadocious, I'm just sharing with you, what is important is that you ask, who owns pricing? If you're inclined to do a decoupled solution where you've got a DMS, but you want to use, you don't want to give up, control over your payment piece. Okay, that's great. I love that. When you decide who to use to put those terminals on your countertop or your cash wrap, make sure you're understanding who owns pricing and do they have the ability to insulate you from price increases. That is the next critical thing in our space, because I am one of 3 independent processing companies with this particular platform that has I have my own language and my own agreement that restricts them from just pushing pricing on me. So it's super important that you ask those questions. Who owns pricing? And are you going to be able to insulate me and honor this pricing as we go forward? Why statements are confusing. Interchange let me just ask, are there any questions about that? I mean, you can throw it in the chat, but I just want to make sure that I'm not buzzing through anything and I'm not missing an important element that somebody would really like to spend a little time on.
Nothing else has popped up yet.
Okay. Interchange categories, assessments, processor fees, and blended together. Small monthly fees can accumulate across locations and departments, and rate changes can be missed if statements aren't reviewed consistently. I know dealers that are good at this. I know dealers that really don't do this on a regular basis. I would encourage you to look at this every month. Pull your statement, have your controller prepare that, your accounts payable folks, somebody who's looking at this thing every month. It should be on, if you're doing traction or EOS in your dealership, or monthly rhythms, I would tell you, please add this as one of those points that you're looking at. Yep, your question. Go ahead, Mark.
I don't have the level of knowledge you do on credit card processing. I think I have a decent level. And one of the cool little tricks that we've used over the last few months is take your credit card statement, blank out your information on there, and upload it to ChatGPT and ask ChatGPT what fees that you're paying on your credit card statement are garbage or junk fees. And it's pretty damn accurate.
Yeah, it is very accurate. That Claude does the same thing. It's crazy. Yeah, it's crazy. And the same company I told you just did 130 basis points increase. We'll do a $495 software release fee in December. Well, I got to tell you guys, I've been doing this 40 years. There's no such thing as a software release fee. It just doesn't exist. And so things like that get wrinkled in, and we don't know. So we don't know to ask. We assume it's right. And I'm using software, so why wouldn't there be a release fee? Well, I'm here to tell you, if you see a release fee, right? If you are paying, another big one I will tell you right now, if you're paying more than $18 a quarter for PCI, you need to question that. If you are with a processor and you're paying $150 non-PCI compliance fee a month, you need to make a change. Okay, those are egregious. All right. PCI fees, compliant fees, $18.80 a quarter. Okay, $6 a month, whatever that ends at, $6 and some change. Non-compliant fees, $24.80 a quarter. Not $150 a month.
Those fees could be called what they are: jet fuel for the corporate jet.
They are. I call them just because fees. They're just because I can and nobody's going to question me. So I guess if you don't take anything away today, just take this. You need to question. It's your money. You're paying for the service. I guarantee you, if something happens with a supplier and you see something go up, you're going to question what happened here, right? Electric bill goes up. What's going on? What did I do? Right? Question. Yeah, Mark, go ahead.
Anonymous asked a question. How are those processors that you mentioned allowed to charge fake fees and jack up interchange rates?
They don't jack up interchange rates. That's the difference. Interchange is something that the processor technically pays on behalf of the merchant. And in my case, it's what we pay interchange every day. We collect our fees from our merchant once a month. So we're in essence paying those wholesale fees on a daily basis for our clients. The merchant technically isn't entitled to interchange fees. Technically, it's my cost, not your cost. The fees they charge are their fees for processing on your behalf, right? Whatever they want to call that, right? And we all do it, right? So the fairest thing you can do, and there's a couple. Go ahead, Mark. You had another question, but I'll come back.
Well, I just think it's like everything else. It's right now. If you want to go and buy a new Corvette limited edition, I don't know what they are, you're going to pay a market adjustment fee. It's what they made up, what they choose to charge you. And
right.
because legally you can go and find any other processor that you want, they're just going to keep doing it until you leave. You're just a number.
That's correct. You're just a number. Yeah, but don't confuse the processor fees with the interchange fees. Totally different things. Completely different things. We're running out of time, and I'm literally on slide 11. So make sure you check your effective rate every month. Make sure that you have somebody empowered in your dealership to do that and provide that to your leadership team meetings. That's super important. The other thing I'm going to hit just real quick, because I know a lot of people out there are interested, and we'll talk about chargebacks. We'll talk about whatever you guys want to talk about, but I know this is a big one. And so I want to just spend a minute here talking about cash discount versus surcharge. Simplest way to think about it, one is deducting a fee, one is adding a fee. Both have different rules and regulations you have to follow. Let me go quickly through adding a fee, which is considered surcharging. Surcharging can only be done on credit cards, only, not debit cards. Surcharging cannot be more than 3%. Period. End of story. No exceptions. Now, does that mean you can't? I mean, and again, I'm going to pick a little bit on Lightspeed. Lightspeed will let you put whatever rate you want to put in their software. The problem is it's not compliant. Lightspeed doesn't have a compliancy problem. You do. If you are doing 4, 5, 5.5, you have the compliance problem, not Lightspeed, right? So you have to understand, where does that liability and that risk land? It lands on you because it's your dealership and it's your merchant account, and you're charging a 4% surcharge. Well, Lightspeed let me. That's not going to be an excuse when you get fined by Visa. Visa's just going to fine you. Okay. So understand, surcharge is adding a fee. I can only add it to a credit card, and I can only add up to 3%. Period.
I think people, I'm a big stickler for words and the nuance, and I think a lot of people get the term legal confused with, you know, compliance with your processor agreement. And what happened was the Supreme Court ruled and made it legal for businesses to surcharge on credit cards. And prior to that, the cash discount was really your only workaround for that process. Legally now we can surcharge, but the law doesn't say exactly how that process works. When it comes to how the process of surcharging works, that is your agreement with Visa and MasterCard. And you have to comply with your processor agreement. As long as you do that, you're good. But yeah, if you go somewhere and they're charging 5% surcharges, you can call up Visa or MasterCard and submit a complaint with them. Visa and MasterCard do not like surcharging. They are very, very against it. And when they get a report that someone is not playing by the rules, that they didn't post it, that it wasn't broken out as a separate line item on the invoice, they will send somebody in there to shop that business, and you'll get warned, you'll get fined, you'll get blacklisted.
Yeah. Great summary. A great summary. In fact, I will tell you, I was traveling and I was cleaning out a relative's house, and I went to a landfill for our county, and they had just introduced surcharging at 4.5%. I called the director. I told them who I was. Not that I'm anybody important, but I just happen to have been in this world my whole life. Hey, you might want to think about this. They didn't call me back. Called them again. Didn't call me back. I went to the trash dump. Paid by my debit card. They surcharged me. I filed a complaint, and they got a visitor. Like, I don't want to do that. It's not my gig. My gig is to help you avoid that. But when you're blatantly going to do things after you've got an opportunity to change it, sorry. Now that's a finable offense. $1,000 first time, $5,000 second time, third time you will not take cards again. It's just that simple. They're cut and dry about it. The other thing you can do is a cash discount. What's the difference? Cash discount can apply to both credit and debit. Why? Because we're setting a retail price that incorporates a certain amount of margin that you're willing to discount for non-hard tender types. What does that mean? Pay by check, pay with cash, pay with wire transfer, whatever you want, right? But I'm incorporating and deducting at the time, and I'm not allowing credit or debit to participate in the deduction, which is why it is compliant. Visa, MasterCard really hate this one. They tolerate surcharge. They really hate this one. But the reality is, if you do this and you do proper notification in your store, If there's a Menards in your area, you will understand. It'll make a lot more sense to you when I say this. If you ever go through a Menards, you see 11% rebate on everything. You know why? Because of credit card fees. So they offer an 11% rebate on the entire store, which means they've got a margin of an additional 11% baked in on every retail price. Now, a couple things you can do. You don't want to do that. That's fine. You can publish a retail price and you can or a cash price and a card price on every single SKU in your store if that's what you want to do. Right?
I
What's that
think
mean? Well, that means on the shelf, you've got to have a retail or you got to have a cash price and a card price on every single item in your dealership. Or you can just set a particular retail price, incorporating that discount and offer that discount at the point of sale. Sorry, Mark, go ahead.
No, I just think that, kind of the simple way to present this, and there was a gas station that opened 20 years ago that only used to take cash. And the way that
Yep.
they presented it to everybody was that everything that we have priced is priced with the cash discount included. That's the price that's put on these items. If you don't want to pay with cash, if you want to use a credit card, we will accept
Yep.
that, but you will pay the money above that. And so that was kind of the workaround before surcharging was legal.
Right. Right. So
I don't really
now
see
they've
cash discounting that much anymore.
you don't, but I always include it because it's changed a little bit from even 5 years ago, right? What they'll tolerate versus what they won't tolerate. The easiest way, again, to think about it is if you're adding cost, you are surcharging. Whether you think you are or not, I'm telling you, that's what you're doing, right? It will violate Visa, MasterCard rules if you don't follow the high-level guidelines I just provided to you. If you're discounting or taking money away, then you're doing a cash discount program, right? One allows an increase to a transaction amount on credit card only. One allows you to discount everything or allows you to collect, if you will, the higher price on any card type, regardless of credit or debit.
I think
Hopefully that clears up a little bit.
Yeah, the other piece there too is that if you're using good hardware and good software, it literally will not let you surcharge on a debit card. So
That's correct.
because the card tells what type it is. The problem with surcharging on debit cards comes from people who aren't even compliant with the merchant agreements. And so,
100%.
and so they're just going, well, I'm going to add 3% to this debit card. Now you're not compliant with the Visa, MasterCard, or whoever the card issuer is.
Yeah, and you took the words right out of my mouth, Mark, because my next thing was make sure you're working with a company that will provide software or hardware, in our case, terminals, that will do this on your behalf, right? That's how you know you're compliant. The other thing I've seen is people that want to surcharge on certain transactions. Guys, you can't do that. If you're going to do surcharge, you do surcharge on everything. It is not pick and choose. Visa doesn't like that. Visa will fine you for that. You're either doing that program or you're not doing that program. It's very straightforward in their eyes. And to Mark's earlier point, you will get secret shopped. Not only will you get noticed, but I get noticed. So they come to me and say, you have a merchant that's doing this, which means I'm on the hook with you, right? If you're one of our merchants. And so your processor gets notified and you get notified. They typically give you a certain period of time to respond to them in writing that you have put these processes in place to remedy the situation. And then they tell you they're going to secret shop you no less than 3 times in the next 90 days. If it happens again, here comes the fines.
Right? Since I think you, like me, are a storyteller, and it makes it tough to do hour-long webinars. Yesterday we went 40 minutes long. I don't want to do that today, but I don't want to skip anything. And you did bounce over about 10 slides. Can you maybe go back to those and let's just do 15 or 20 seconds per slide? That way we've got some quick commentary in the recording of this so that everybody gets to see that, hey, we didn't get to spend a lot of time on this, but these items were important. So what else do you have in here?
So real quick, here's just another quick slide about tap, chip, online, and phone, and how the take payments matters in terms of the rate that you're going to pay. Interchange rates are derivative of card types. We've talked a bit about that today. If you're using a consumer card, those are going to be your, if someone's using a consumer card in your store that doesn't have any points, there are still some of those out there. Those are going to be your lower interchange or your regulated debit cards. What is that? It's any regulated or any bank debit card that's been issued to you or issued to your customer, that was issued by a bank with 10 billion in assets or less. So if they're using a Capital One card, a Citibank debit card, a Chase debit card. Yep, go ahead. Question.
Quick side piece on this question for you. American Express typically has a higher cost to the merchant than anybody else. And I've started to see more and more dealers that are just not accepting American Express cards anymore.
Yeah.
And what they typically say is that those customers who have American Express, they always have a Visa or MasterCard for those situations. So your
They do.
thoughts on dealers doing that?
Yeah, they do. I think it's situational. Two things I would say. One is if you're dealing with a reputable processor, the actual cost difference on American Express should not exceed 20 basis points. I mean, I can tell you, I write deals today for American Express that are no more than 20 basis points higher than my Discover, MasterCard, and Visa.
Okay.
And so you want to make sure you're asking the right questions there. The other thing I would tell you, and this is a little known secret, if you are doing $1 million a year or more on Amex, go direct. Do not go through your processor. They have a direct program. They will not let us compete with that pricing. I know that maybe it doesn't fit everybody, but if you're doing $1 million or more in Amex a year, it's called Amex Direct. Get out of OptBlue because it's going to cost you more. Case in point, I'll give you a quick aside. I had a rather large refuge company, 6-7 million a month in credit card processing. I was charging them interchange in 5. So whatever my cost was in 5 basis points. And effectively, they were paying about 100 and maybe 175, 180 basis points, 190 basis points, because they all was card not present. Everything was over the phone. So American Express was 210. They hit $1 million. American Express called me and said, we need to move them to us. I lost the business. I lost the American Express business, and American Express wrote the deal at 150 basis points. So 70 basis points to them, which is a great deal for the merchant.
We also found years ago, and I did this 20 years ago, that we were able to get reclassified by American Express from a boat dealer to an automotive dealer. And that in itself saved us 0.3 of a point.
Okay, so that's a great example, Mark, of why SIC codes matter, why industries matter, because we have different interchange qualification based on card type, right? So it does make a difference. But if you're in that category, $1 million or more, I'd go direct. If you need information on that, I'll get it to Mark, where you can call to get that done. Otherwise, again, look at your effective rate overall. Fill out your American Express. What did I pay on American Express? Divide your total fees in Amex by your total volume and understand what you're paying for that. If it is 20 basis points or more than what your effective rate is, you need to make a phone call.
Hey, next slide.
Right. Sorry, I get going and I get excited about stuff. Manual entry, we've already talked about that and how downgrades are affected based on getting away from card type or card present. Yep.
So real quick on this. So Andrea had a question. Is there a reasonable percentage for fraud or chargebacks, like we calculate a percentage of shrinkage on parts inventory? I mean, ultimately your goal for fraud and chargebacks is 0, but is there?
Yeah, I was just going to say 0. Oh man, that's such a tough question. And I have so much to share on that. Because fraud has just gotten so out of hand.
Let that one stew in the back of your head. Let's keep working through, and then we'll circle back to that.
Yeah, so we'll talk about manual entry and downgrades. We've already talked about that quite a bit. Equipment integration and gaps, discount terminals create duplicate entry, right? And you guys are all on board with this. So the integration thing is really a big thing for our space. And it just helps. It just makes things smoother. So I get it. I understand that.
While you're on that page talking about equipment, so I mean, most Lightspeed dealers know that every 3 or 4 years we're required to buy a whole new suite of equipment. Is the industry and the technology changing that fast? So that's really a legitimate push on us, or are we just getting taken advantage of?
Wow, that's a really that's a tough question to answer in public. It depends. Probably the largest transition that we've had in the last 15 years was swipe to chip. That was the biggest. Once we introduced chip card readers, you've really eliminated a lot of the fraud that we were seeing in non-chip in the non-chip environment. I hesitate to answer the question directly only because I don't know Lightspeed's ecosystem.
Okay.
I don't know what may be motivating them. I do know it's a profit center. That's what I would tell you. It's a profit center, and I will answer it this way, Mark. Am I going out to my merchants every 4 or 5 years? No.
Right. That's a good way
I'm
to
not.
answer it.
So
That one's not good.
take that how
That
you
one's
want.
not going to get you canceled.
I appreciate it. I appreciate it. But it is important to make sure your equipment's up to date. CVV codes are working. AVS prompts are working, right? You don't want to get rid of those things. And trust me, we can. I can go right in the terminals and shut it off if you want to get prompted again. The problem is it's going to shove all those transactions into a higher interchange category. The exposure chargebacks and operational problems. Don't know how many chargeback issues you guys are dealing with. But they're not just a payment issue, they're a documentation issue. And I sincerely mean that. This is about protecting yourself. And I can go on for an hour and a half just on chargebacks and how to tighten things up. We just had a merchant that last month that I do a ton in the auction space as well. And auction companies ship the product, let the buyer decide who the shipper was. $2,800 or whatever it was item ships out, never gets delivered. Cardholder charges it back, non-delivery. Find out the customer refused delivery, and now the merchant is stuck with no product, a chargeback, and no money. Right? Why? Because they gave up control over shipping. Right? So we helped them navigate back with the shipping company and helped them coordinate, basically paying to have it shipped, the item shipped back to them.
Yeah.
So yeah, they were out that cost, but they at least got the item back and can resell it and recover some of that. So it's little things like that in your operational flow that you need to be cognizant of. Same thing with chargebacks, right? I want to make sure anytime I can get a signature and confirmation delivery, I have to do that if that customer's not present, right?
Well,
I got to look at driver's licenses. I got to verify authenticity of the card holder. If somebody's daughter's bringing a card in, I'm really sorry. Don't run the card. Don't run the card. Get a different form of payment. Sorry, Mark. Go ahead.
No, I was just going to say, and I haven't worked on this for years. I've also done a lot of research, and in Europe, they got two things that are really different. They pay about 85% less fees than we do here in this country, and they've also got the fraud thing figured out, and that's taken care of over there. There just really, for the most part, is not card fraud in Europe, and that technology is sorted out. Congress could sign a rule. We could have that in place in 6 months. All the fraud would be done. Do you think that we'll ever see that technology here in the U.S.?
I do.
Okay, good.
If I use chip-based platform, the chip-based platform as an example, the chip-based platform was in existence 15 years in Europe before it was ever introduced in the U.S.
Yeah.
So my guess is yes, we will get there. We just, for whatever reason, we like to take our licks a little longer and our punishment a little longer before we figure out there's an easier way to do this in a more secure way. So I'm using just the chip evolution as my basis for my opinion there, but I think we will get there. Yeah.
All right. Next slide.
Yep. Next slide. So transaction risk ladder, like we talked about, lowest risk, I'm in the store. Highest risk, I shipped the high ticket item with weak verification. Another quick story. As a storyteller, I had a boat dealer a number of years ago. Roxanne called me and said, "Hey man, we just got an order for 24,000 spark plugs." I said, "Really? Where's it going?" And she said, some South American
Haiti,
country.
Guatemala.
Yeah, somewhere. Yeah, Guatemala, wherever. I'm like, Roxanne. And she said, "Bill, it's a huge sale." I'm like, "And you're going to pay in many, many ways." I said, "Do we know the customer?" Next key thing you should write down, know your customer. I don't have a problem if you take a credit card over the phone of an existing customer, somebody you've dealt with for years. I'm good with that. You get an order like this for, 1,000 air cleaners, and you're going to
Wire
ship it
transfer.
somewhere else. Wire
Two
transfer,
words.
baby,
Wire transfer.
all day long. So
Yep.
why? Because you're going to get a chargeback. You're going to lose the product, and you're going to lose the chargeback. So you're going to lose the revenue as well. So don't think it's a gift horse, because it's not. High risk dealer scenarios: deposits, custom orders, and special order parts, phone orders, shipped accessories, service authors. You spent some time on this stuff already. You just need to know your customer, KYC. If it's an existing customer, great. If it's someone you've never dealt with ever, my tendency would be get a wire transfer. Or an ACH. You want to pay by an ACH? Fine. I'll take an ACH. I'm not going to take a credit card. Don't take the risk. AVS. Go ahead. What's that?
While you're on that slide real quick, and I hate to everybody who's on here, hopefully you're an owner or a GM, because I'm going to tell your employees how to steal from you, only because I've dealt with this lots of times over the last 10 years. You have a customer comes in, buys a product, your parts counter person processes that transaction. A week later, that customer comes back in and returns that product, and you put the refund on the credit card. There's a couple of things that didn't happen never happened in that scenario. One, the customer never came back in, and they never returned a part to you. What happened was your employee had access to do returns without any kind of manager override. They processed that return, and on the refund, they put the refund on their own personal credit card. And now they've got that credit on their credit card, and you have a DMS that says, we've got this part on the shelf that you no longer have. And I've seen this so many times. I think there's a Facebook group that teaches employees how to steal from their employers. And that's one of the easiest things that I continually see.
Wow, that's a crazy scenario, because I have a very, very real experience with that. I had a furniture store that had an employee that was doing the very same thing. And we intervened with that furniture store and the FBI and created a sting on this gal. And she went to federal prison, doing exactly what you described, thinking this was the thinking. It'll make my monthly payment on my credit card. That's what her thought was. Well, guess what it does not do? It does not make your monthly payment on your credit card. Okay, it doesn't. It reduces the balance on the credit card, but it doesn't count toward your monthly payment. So it's just funny. I haven't heard that story or that scenario in a while. I've lived it, and we've got a federal prosecution on it. So I get a little excited out of that. So
I could write a book on how employees steal from dealers.
I'm sure you could. Okay, AVS and CVV documentation. We have beat this to death. Signed work orders, pickup records signed, delivery confirmations signed. Why? Because when you get a chargeback, you need to do everything you can to support the legitimacy of the sale. It's that simple. I've checked ID. I've verified signature. Whatever you can do, because as soon as you say, "Well, I don't have a signature," well, then they can make a claim it was never delivered, and you have nothing to stand on.
We've done audits on hundreds of fraudulent transactions, and I think the key thing that every dealer going back and looking at it, listen to your gut. If your gut says something is not right, it's probably not right.
Not.
And right. It's amazing how accurate that is, and it's amazing how many times people have said, "Yeah, I didn't feel right, but I did it anyway," and now they're paying the price for it. The other two things that are very, very consistent is people that have a story. I'm coming in because my brother got sick and he couldn't come in to pick this up. And then usually happening right at the end of the day. They come in a couple of minutes before you close, you're in a rush, you want to get out of there. And so you're less likely to stick to your standards. And those are kind of the ways that dealers get taken advantage of.
Yeah, total great feedback. PCI compliance, cardholder data must be protected by process and training. Can't emphasize that enough. Don't write credit card numbers down. Don't let your employees write them down. Restrict the access to that type of information to only those that need to know. You should never store cardholder data in uncontrolled systems. And again, compliance failures can create fines, liability, and reputational damage. I share the story when I was growing up. I had really bad teeth, small town. Dr. Erdoch was my dentist. I'd go in, I'd get work done. I was there so often. My dad had a 3x5 card in a recipe box. His credit card number was on it. So when I would check out with Becky, she'd pull the card out and she'd run the transaction. She'd call up and it's back when you had to call up and get an authorization and do the knuckle buster. Don't do that anymore. If you've got a recipe box of credit card numbers in your dealership, please get rid of it. It is not doing you any favors.
I've seen Lightspeed dealers that use the second address line for the customer for their credit card number and expiration date. Actually prints out on the invoice.
You just cannot do that. It is so dangerous, so dangerous. This again, I'll give you all the slides so we don't need to look at the prettiness of this stuff. Cost recovery options we talked about. We jumped right to that. Dealer action plan, review your statements, measure your effective rate, audit your transactions, reduce your risk, train and monitor. Dealer best practices, dip or tap cards whenever possible. Use secure payment links to remote transactions. Use AVS and CVV on every non-card present transaction, and keep signed documentation and proof of delivery. Always. I don't like when relevant. I think it's the more I thought about it, it was like, no, it's always relevant because you are on the hook for 180 days for a chargeback.
You're not doing the customer a favor by taking a credit card. You're entering into a relationship at that point in time.
That's correct. So it's real important with a lot of faith. It's real important that you understand when you process a credit card transaction, the merchant is on the hook for 180 days for a chargeback. At any point, that customer in 180 days can issue a chargeback, and 9 times out of 10, they're going to get honored by the issuing bank.
It's a great reason why you shouldn't allow customers to charge entire vehicles to credit cards, because 3 months down the road, they have an engine blows up. They just call up the manufacturer, or they call up the credit card company and say, didn't work out. Then they just call you, the dealership, and say, it's in the driveway. Come pick it up whenever you want it.
Yep. And what they're going to claim is that the product was not as described.
Yeah.
It doesn't run, blew up. Right. So
and they'll win.
And they will win. Absolutely will win. Statement review your effective rate. Watch for new fees, rate changes. There is a little section. I wish I could throw this over there. I don't think I can. There's a little section at the bottom of every statement that's called the important information or merchant statement message section.
Here's why your rates are going up this month.
This is why you need to read it. We are all required to give you 30-day notice. So you need to read it. And if you have a question, call the 800 number that's listed on your statement. Compare transaction mix changes before assuming price change. Really important. Did you have an unusual number of hanky transactions this month? Right? Versus what you normally see. What will that do? That'll drive up the interchange. What will that do? That'll impact your overall effective rate. So you got to pay attention to that stuff. Questions. What's my true effective rate by department or location? Which transactions are downgrading and why? What fraud tools are active today? There's a new thing called 3D Secure that you can look into. I'll just throw it out there, write it down, 3D Secure. It's a way that we can do offline gateway transactions and ensure, or if you will, insulate you from liability for fraud and chargebacks. So take a look at it online. You'll find a lot of information about it. What fees or processors marking up versus unavoidable network costs. Those are sometimes hard to decipher on your statement. In our case, again, you will see a copy of a statement. I will send it with the deck, and the second to the last page will be all of the interchange categories. So I report, here's all the interchange categories. You can actually see transaction count, transaction volume, MasterCard key entered credit, $70.79 worth of fees. Those are the actual true interchange fees at the time of this statement. It's important for you to look at that and be familiar with it. Red flags, very low teaser rates. Again, it does not matter if someone tells you they're going to charge you 1.5%. What matters is the effective rate and who controls pricing.
And don't get sucked into the free equipment.
That's correct. Long-term contracts with unclear termination terms, monthly fees that are hard to explain, and no regular statement. I'm seeing that more and more often when we talk to merchants and we go, well, just send me over a statement. Let me see what you got. Go, I don't get a statement. What do you mean you don't get a statement? You're paying a bill, you don't get a statement for it? You have no reconciliation capability other than the deduction out of your bank account once a month? Like, it doesn't work.
I I can tell you that our business now, we almost, with very few exceptions, will not sign any agreement with any company, not just credit card processors, that lasts more than 12 months. We actually have a
Yeah.
stamp that we stamp everyone, and it says at the end of 12 months, this contract goes month to month. We do not do long-term contracts anymore.
Yeah, totally agree. What does good look like? Clear reporting and reconciliation, consistent transaction handling across departments, defined fraud prevention and documentation standards, and a partner who explains costs instead of hiding behind complexity. I cannot emphasize that enough. If you have somebody, and Mark said it earlier, listen to your gut. If you feel like somebody's dancing around being candid with you, it's because they're dancing around being candid with you. It's not because they don't know what to say or any other reason. They're doing exactly what you think they're doing. That should be that should be alarming to you. Key takeaways: not all card transactions cost the same. Process discipline materially impacts profitability. How you do what you do in your dealership matters. How your team is interacting with payment, credit card acceptance matters. Fraud prevention depends on layered controls, and transparency creates trust with both the dealers and the customers. Um, we'll skip that. Closing the goal is not to just lower your cost, but it's to improve and enhance your visibility, better process, and lower risk. Dealers that manage acceptance intentionally protect your margins and improve customer experience. So this is an intentional objective. This is not passive. This is deliberative. A strong payment program is operational discipline. I can't say that any better. It does not. Don't just think the guy's going to walk or gal's going to walk in the door and give you a low rate. It's all about operational discipline. Understand the lay of the land, execute within the rules, and you're going to drive efficiency and productivity and cost savings in your business. Questions, discussions, and then thank you. And that's my name. And I apologize. We were 6 minutes over or 16 minutes over.
We're going to be a few minutes longer because I got 3 questions. I actually
All
had
right.
about 12 questions of my own, but
Okay.
I am not going to ask those because the attendees, their questions are more important. So Jennifer asked, surcharges are still not allowed in Massachusetts. Do you think this will change in the future?
That's a state issue. It varies by state. We're seeing more and more legislation being introduced by states. I don't know. I really don't know. We have a couple of states where we're having some issues with that, or we have caps in some states that are just this arbitrary. We have something coming up in Illinois that's supposed to happen this fall or this summer that is to be candid. Visa MasterCard have already put notice, Governor Pritzker on notice, you put this in place, we will no longer allow card acceptance in Illinois, period. That means all the merchants in Illinois that currently rely on credit card processing as a form of payment. Now, will they follow through with that? That's a different question. I don't know. But they have said we will not allow anyone to accept Visa MasterCard in Illinois if they introduce that legislation. So great question, Jennifer. I wish I had a direct answer for you. I don't know. But
All right.
Cash discount could be used. You can use cash discount. You just can't surcharge.
So Andrea had a second question. How does the card terminal know what kind of card the customer will use? Don't you have to show the total first, then they swipe, tap, insert? How do surcharges work with that? What about tax on surcharges?
It's a great question. So on every credit card, the first six digits of the card number are called the BIN, the BIN, the bank identification number. That BIN is unique to a credit or a debit card. So when that card gets inserted and read or entered, it knows immediately if that card is a debit or credit card. We do what is called dynamic BIN management on our side to make sure that cards are recognized as either debit or credit at the point of sale, so that we don't inappropriately charge the fee.
I think a lot of people, I'm surprised on this, don't even realize that if you just look at the first digit of a credit card number, it tells you what it is. 3 American Express, 4 Visa, 5 MasterCard. But there's a lot of information that's just built into the card number by itself.
That's correct.
So I want to go, there is kind of this whole, chicken and this egg scenario. It's like, well, okay, if you come up with a surcharge, one of the things that a lot of dealers have not thought about and now unfortunately have found out the hard way, and it's cost them a lot of money, is that the amount of money that dealers are collecting on surcharges is taxable income for the business. And a lot of dealers were not paying taxes on that, and now they're getting to pay penalties and fines at your 38% plus penalties and fees. A lot of this extra money that we took as surcharges. So now you really need to think about how we're doing this, how we're putting it in the DMS, and making sure that we're being compliant with IRS regulations on that, as well as any state
100,
or local fees that you've got to pay.
100%. If it comes in, it's got to be recorded as revenue, even though it's going right back out in fees. You're still getting the deduction as cost, but you've got to pay tax on that.
Yeah, there's four things that you have to do to be surcharge compliant. And if I'm wrong here, then tell me I'm wrong. But you're supposed to give Visa or MasterCard 60 days notice. You're supposed to have signage up around your dealership and on the counter. You are supposed to have the surcharge broken out as a separate line item on the bill of
That's
sale
correct.
or the invoice. So you can't just add it into the MSRP and say we're
That is
compliant.
correct.
And it needs to be broken out as a separate line on your credit card receipt. Am I
That's
correct on all
correct.
four of those? And
100%. Yep.
there's a fifth item, and my understanding was that when you come up with a surcharge amount, you could go back and look at an historical period of time from 6 months to a year, and what is the rate that I paid, my effective rate over that period of time, and that is the amount that I could surcharge, no higher than that. But surcharging cannot be a profit center for businesses.
It cannot. So that's the real critical piece of what you're saying. It can't be considered a profit center for the business. I would tell you, um, I see far fewer violations issued on that point than I do on 4% charges, non-disclosure, non-compliant receipts. Those clearly carry the day on right now on fines. I'm not really seeing many fines on the fact that you are charging 3% and your effective rate might have been 279. We're not see that's a much harder, although you are correct, right? The legalese of the agreement, that's a much harder thing to prove or to figure out. It's much easier to look at, oh, you're charging 4.5% surcharge. Here's a fine, right? So we aren't seeing a lot of violations being issued on that, although it is part of the plan, part of the program.
Can you see the Excel spreadsheet that I put up?
I can.
So this is just one that we keep at our dealership, and you can kind of see every month and every
Yep.
year, and I just fill it in as our monthly statements come in. But what
Yep.
is our total transaction volume? What are we paying fees? What's our effective
Yep.
rate? And then I kind of look
Yep.
at that over a period of time to make sure
Yep.
that it stays reasonable. So when that
Yep.
number starts to creep up, I'm calling the credit card processor and saying, what can we do to get
Yeah.
our rates back in line again?
Yeah, and that's a great thing to do. The one thing I would point out there is you saw some variation in Mark's effective rates. There are times, again, when it is a card type distribution issue. So maybe they hand keyed a little bit more in May of 25, right? I don't know, versus March of 25, right?
Yeah,
Because
I
there's
think our,
clearly a difference there. Probably hand keyed or probably received more higher interchange cards in that period of May than he did in February. So you're going to see some little variations. I like what he's doing. I like what you're doing, Mark. And you're kind of banding these things and seeing overall how are we trending, which I think is smart.
Yeah,
Um,
I just try to
but
look at it that 1 year at a time. What does it
yeah,
look like and how
yeah,
far off that delta are we? Because I know, there's some times where, a new model comes out, we pre-sell them, we're taking down payments over the phone. There's some
right,
times where we'll make exceptions for different things, but
right.
I am used to seeing that. But once down here, it got to kind of this 2.5,
Yeah,
2.3.
yeah,
That's when I'm calling WorldPay and saying, hey, we got to get this right. And you can see, all of a sudden, just by calling,
yeah. Boom. Yep.
we dropped 0.4 of a point. And
Yeah, and that's I mean, like 40 basis points on what volume is that? A couple million bucks. I mean, do the math. I mean, 40 basis points on $2 million is a lot of money,
yeah, 20,
right? And,
20,
and,
20,
and if you don't pay any
2024, that was
attention,
$7.5 million in transactions.
yeah, if you don't pay attention to that, it starts to add up, and before you know it, we're stepping over dollars to pick up pennies, and you're like, wait a minute, let's rethink this. So appreciate you sharing that, Mark. That's good stuff.
Last question from Andrea again, and the one that stumped you originally. So we're going to go back to it because we like to make this as painful as possible.
That's fine.
Is there a reasonable percentage for fraud chargebacks like we calculate? So, I mean, is there a level of fraud or chargebacks that you would look at a dealer and say you probably got a problem that you need to address?
Yes. If you're averaging, I would say 2, 3, 4 chargebacks a month, you got a problem.
Okay.
You got a problem. You need to look at that. You need to look at what controls are in my dealership that we need to tighten up. Because there's something happening there. You shouldn't see that. And you're going to see the card brands really tighten that up here in the next 6 months, where they're really starting to look at two things: chargeback ratios to total transactions and declined ratios to total transactions. Because both of those are indicators that there's something not good at the merchant that's going on. You typically don't want to see anything more than a 1% decline. You typically don't want to see more than say a 0.5% to 1% chargeback. But in the world of the dealer world, I would say, 3, 4 chargebacks a month. You really don't want to see more than that. And you want to dig into your internal processes to figure out what's going on. It's also another reason to say, hey guys, sometimes returning an item is easier than taking a chargeback, right? Sometimes just take the return. If somebody comes back, they're not happy, take the return. Because at the end of the day, you're going to lose the chargeback. So you're going to eat the fee anyway. Then you're going to want to go into arbitration, which is now a $600 ticket of entry fee, and you're going to lose anyway. So at the end of the day, you're just looking at throwing good money after bad. If I take the return, figure out how we adjudicate that return, sell it, resell it, whatever we do. I know it's easy for me to say that from my lens, but I'm looking from the lens of what I'm seeing in the processing world. Dealers, I've got some merchants that will just go to their death. And it's like, why are you doing this? We're just throwing good money after bad. It just seems, easier to take the high road, take the return and be done with it.
At our dealership, we just, every time one of those transactions happens, we get all the people together and we sit down and talk about what happened. And, again, almost every time somebody says, well, it didn't feel right, why the hell did we do it in the first place? But, in the end, we've had to change the way we do some things. And now, we don't take, orders for over X dollars in our dealership with a customer we've never done business with before. And does that cost us some opportunities? And maybe some of those customers go and buy online? Yeah, but if you have $1,000 fraudulent transaction, you could do the math and say, how much do we actually have to sell to make back that $1,000? Dealers will come up with a number, but the reality is you can never sell enough to make up for that transaction. You can never earn that $1,000 back again. It's always a cost that's going to hit the bottom line in your dealership.
Yep.
So,
well, hey, Mark, thanks, man. It's been a great time with you guys today. And they've got I threw my contact info up. We've been an NPDA partner for a long time. If you have questions, you're not going to get the salesy. You saw who we are today. I'm not here to convert you. Although we'd love to have you on program and help support the NPDA's mission. My job is to educate and reinforce the reason why you're a member to begin with. Is for content like this, stuff you're just not going to get anywhere else. So that's really what we're here to support. And I appreciate the opportunity once again, Mark, to spend some time this afternoon and work with you.
So thanks to everyone who attended today's webinar, done in conjunction with another one of our partners at the NPDA. Excited to announce that we'll be hosting weekly webinars with our partners throughout the rest of the spring and the summer. I would love to say that I'm halfway done, but I'm not even halfway done yet. So if you're sick and tired of hearing my voice and my weird global accent, then I'm sorry. I got 9 more of these that I gotta bang out over the next 3 months. So, but we're gonna cover a bunch of really cool topics and make sure that dealers come away with some knowledge they don't have today. As a reminder, the NPDA is here not just to support our member dealers, but also the entire industry. If you're a current member, thanks for supporting the organization. If you're not, then consider joining. You can see up on the screen less than $400. I mean, what is that? It's the cost of like going to Starbucks 8 times. You could be a member of the NPDA, and you get a whole lot more out of it than you would going to Starbucks and getting some crappy coffee. So join the
Right.
NPDA, support what we're doing. Just so you know, our primary focus right now, we polled dealer members. We know that everybody is in alignment. We are working hard to get the manufacturers on board to include freight and setup charges above the line within the MSRP to get ahead of these FTC actions that are happening right now. So that's kind of our big focus at this point in time, but we will continue to do webinars like this. Thanks for everyone who took the time to attend today's webinar. If you have any further questions, don't hesitate to reach out. We will make this available on our YouTube channel at the NPDA. Be up there in a couple of days. And if you have any further questions or need any assistance with any of this, then reach out to me. I'm easy to find online. And if you got questions for Bill and you can't track him down, then just let me know and I'll put you two in contact with each other. Again, thanks for everything. And I hope everyone has a great week. Bye-bye.